Hey, what's up, everyone? It's Ian Imeno, your 5280 agent, and I'm here to bring up a little tidbit about credit scores. No matter what you do, whether it's wanting to live in a new apartment, sign a new lease, get a new loan, let's say auto loan or home loan, your credit score will be there following you. It determines your terms, your rates, your interest, all that other good stuff. I want to start out with your credit score ranges, but your FICO credit score ranges from, I believe the lowest is about 350, and from 350 all the way up to 850. But that being said, what's good, what's bad, what's fair, and what's excellent. So what I want everyone to do is just get up to that excellent score. It's going to take some time, but nonetheless, it's really important for you to get up to that good to excellent area. From 350 to about like 550 or maybe even 590, I want to say that's sort of on the red zone. And that's not the football term. I don't think that's going to be anywhere near a touchdown, if you will. That's not a very good credit score. What you want to do is just boost it up to at least a 650. So 650 is around that fair to medium to like you're getting there. It's pretty good. And they're starting to build trust. Like people are starting to build trust, your financial history and having to pay off payments. I know me as a landlord, I look for tenants that have at least a 650 credit score. That shows me that the tenants or the applicants can pay off debts on time. And of course, if it's going to be rent, which is one of their most significant portions of their paycheck, I want to make sure that they're able to pay that on time. And a 650 sort of reflects that. So around 650 is a pretty good credit score. But what I'm really looking for a strong applicant as a landlord, that is around that 700 to 720 range. And that's when you start to get like that, a B grade. So keep that in mind. And then going from like 720 to 850, I want to say that's on the very good to excellent scale. That's when you can get the really good terms, really good interest rates. You're set up for success and whatever you ask for in terms of loans and the terms as well and the interest rates. Let's get into how you can actually keep up or boost up your credit score. So number one, I would say, let's first of all break down what determines your credit score. So there's several components to it. Number one, which is 35% of your FICO credit score, is based on your payment history. You need to make sure that you pay your debts on time. Do not pay for anything or at least purchase anything that you cannot afford. Everything that you put onto your credit card, you need to make sure that you have at least that much to make sure that you're able to cover that expense, as well as any other expense coming up for the rest of the month. The second thing that I want to bring up is your credit usage. With a lot of credit cards, you don't have an infinite amount of money that you can actually use as purchasing power. So for a lot of credit cards, you start out with, let's say, 15 grand. So with the 15 grand amounts, you want to make sure that, well, actually with any credit card, you want to make sure that you're only using about 1/3 of that maximum allotted. So with a $15,000 maximum balance on your credit card, I would say use about 5 grand on that. So maximum purchase for that month and make sure you're able to pay it off is only $5,000. That would keep your credit score really high, showing that you're being responsible and you're not putting down anything on your credit card that's a lot more than what you can actually afford. Now, a couple of other things that I want to bring up is the other components for determining your credit score, which are the age of the credit accounts, which is about a factor of 15% of your determining of your credit score. And also your credit mix and your new credit inquiries, which those two are about 10% of determining your credit score. So the older accounts that you have, the better, because it shows that you're able to maintain an account for a long period of time and you're able to pay that off very quickly and by the end of the month, and you're not holding down any of these debts. If you don't pay off those credit card debts, credit card interest rates are insane. So they're ranging about 19 to 25% of whatever you have in balance for your credit card. So imagine an extra 25% being added onto your balance just because you didn't pay it on time. That's wasted money. 1/4 of the balance just going away from your bank account. Do not forget to pay off your balance. One thing that I would do, make sure you set up auto pay. Auto pay is this feature that a lot of cards have where you can just set up your credit card, link up your accounts to your credit card balance, and making sure that your balance pays for that credit card balance as soon as possible, or at least a couple days before that due date of when the payment is due. So that way you can just set it and forget it, and making sure that all your purchases do not exceed that amount or the amount that you have in your bank account. You're able to just continually fund it, and you're able to reap the benefits of actually holding a credit card. For example, mileage points, cash back bonuses, things like that. Another thing that I would recommend too is something that I have is mint.com. Mint is a great software to use. It's online, it's an app on your phone, and I use it constantly. You link up a lot of your accounts, if not all of your accounts, to show like your net worth, your cash flow, where you're at in your debts and things like that. All the transactions that have been happening is all in one place. So let's say you have several accounts. Let's say you have a brokerage account as well, and any sort of loans that you have, car loans, home loans, it can be all put into Mint, and it factors all of that in. I'm not affiliated with Mint at all, but I highly recommend it. It's really good. What can we do to keep up your credit score? Number one, like I said, is to avoid late payments. That's a huge detriment. With it being 35% of your determinant of your credit score, you want to make sure that your dues are paid on time and full as well. That way you don't have any leftover amount. Another thing, and I recommend this for all parents, is to put your minor on the credit card as well as yourself. Of course, you don't let your minor use your credit card, but every transaction that you do and every payoff that you do is directly affecting your credit score and your minor's, because your minor's name is also on your account. So with you building up your own credit, you're also building up your minor's credit. Your child's credit will go up, and by the time that they're 16 or 18, they'll come into the workforce or come into the real world with a solid footing in their financial, situation. My parents did that for me, and I am eternally grateful. So I started off with I think just over 650 in a credit score. And then from there I had, certain payments that I had to do. And that just increased my credit score even more from there. So it's really great. So that about wraps it up. Hopefully these bits of information about credit score and the sort of the big old mystery behind it is subdued, and there's no more fog, but at least some light coming into it. Hope that helps. I'm Ian, your 5280 agent. Thanks for sticking around, and I'll see you later.